Okay, we're almost done and we're almost through with our 90% potential trade. The current one that I'm looking at isn't as perfect as you can expect from some others, but that's just the way it goes. Some days you don't find exactly what you're looking for, and some days you take what you get. But my trade on LUV should do exceptionally well if I can get the breakout above the one-year high. Now what we're going to do, lastly, since we're not done, you have to continuously do research and double-check and triple-check and make sure everything is absolutely in check. So we're going to do our fundamentals now. And the first fundamentals we're going to do is we're going to put it into our Yahoo Finance. Just put in the ticker symbol LUV into the Yahoo Finance and then hit enter. And then it's going to pull up the little preview or bio of the stock. Right now we have here's the average volume of the past 3 months. Okay? It's 8.6 million. Today's volume was 10 million. So that's really good. That's a positive indicator. That means that we're trading more shares than the average. That means that people are interested in buying this thing, the fact that it was up today and it's up after hours. It's a big company. You probably won't expect too much negativity out of looking at the fundamentals. They pay a little bit of a dividend. Their earnings per share are fine. The PE might be a little bit high. It's 25. But then you go on the left side here under company. You compare it to the competitors. And then you go to PE. And then you see what the competitors are. The industry is 24.60. So we're right in line with the competitors on the PE. That's the price to earnings. That's the price that's currently trading compared to the earnings. Is the price higher or lower in compared to earnings? So we're right in average with the industry. This beta is one of my favorite indicators, and what this beta is it takes the forward growth and earnings potential of the next 5 years, and then it factors it in, and then anything under 2 is very cheap. Anything over 2 is expensive. So we're at a 0.63. We're under 1. So we're very cheap on this stock. It has still a long ways to go according to its future earnings. And then the one-year target doesn't really matter. That's just, Yahoo's people choosing a target. I don't really pay attention to that. Even though they got 51, I don't care. And then under company, click on key statistics. And then here's where we'll get into some stuff. So the PEG ratio is the 5-year expected. This is what you want under 2. I apologize. So this is 0.46. This is way under 2. It's still way undervalued. The beta is the speed at which the stock trades. So let's go back there real quick. Well, we don't actually have to. I can see beta over here. So here's beta, 0.63 again. That is the speed at which the stock trades. So the market is considered a 1. Anything that trades below the market is considered slower than the market, and then anything that trades above the market is considered faster than the market. So this trades slower than the market does. And you want held by institutions. These are the big money, the big institutions. You want them to be holding at least 75% or more. They have 82%, which is great. Only 1.6% are shorting the stock. That means only 1.6% of people are betting against the stock. That means everyone's positive. They got $3.5 billion in cash. They got cash flow. It's just looking great. The profit margin is fine. And then you go over to the competitors, and then you see what the competitors are doing. Here's the Delta Airlines. They're just a little bit bigger, but not too much. Revenues are twice as much as Love's. So everything's looking pretty good. Then you can go over here to CNBC, type in your ticker symbol. And then click on earnings. And what you want to see is you want to see growing earnings over the years. This is 2011 to 2014. You want to see the earnings. It shows every quarter. And you just want to see them growing constantly over the years, which it's doing. You want to see that uptrend. So that's very positive. Let me go back to that beta real quick because I think I got that mistaken. Below 1 is faster than the market. Above 1 is slower than the market. So this trades a little bit faster than the market. And then let's go to Google Finance. This is our last view. Put in the ticker symbol. And then on the left-hand side, click on Financials. And then in the upper part here, you look at the bar chart. And the blue is revenues. You want to see the revenues growing. All right, so that's 2013 to 2014. We have been growing. And then the revenues have been growing. The net income is the little yellow. That's been growing, so they're making money. And then the profit margin has been growing, which is what you want to see. They're making money. The profit margin is growing. And their operating income has also been growing. And then here's the annual data. So on a revenue basis from 2009 to 2013, been growing every year. And the net income is growing over the past 2 years. And the profit margin is in an upswing. And then you can really get into it if you want, go into the balance sheet and get into the cash flow and everything like that. But that's pretty much the fundamental research, and you just want to make sure that all the books are looking good, all the growth is looking good. There's all kinds of reasons why people would want to buy this stock in comparison to the competitors. And, you know, there's nothing negative holding you back or holding the stock back from doing well. It looks great. Southwest Airlines. High and tight flag. Potential 90% of hitting the price target of $55. Keep your eye on it. It should go there. And that's how you find the best stock trade on the stock market.